Right, we're going to start this session by talking about MACD because I think MACD is a really useful indicator, and if we just fine tune it, remind ourselves what we can do with it, then I think it's a really useful tool. Okay, so what does it actually measure? It measures momentum and allows you to find pullbacks in trends, I think. And also, most importantly, it's a really valuable confirmation in a reversal setup for me. So let's just look at some recent examples of MACD. I think one good one is oil. If we look at this oil, this is a 60-minute chart, sectioned off week by week. And what I see in this is we cross the cross over here, and we start to cross the midline on the histograms at this point here as we come out of this week and come into the new week. And you can see the 20-day moving average suggests that this is weak as well. We have one close above it, and then we just drift lower. And we just basically just run out of steam. And so the momentum really cracks here as we really fail, close underneath the 20-day moving average, and we get a few hours to the downside. Now, what I like, if you've got a good trending market, and oil has been trending up on the whole. We'll look at the daily in a minute. But if you've got a market that has been trending up, and then you've got this big low reading on the MACD, then I think this is potentially a good opportunity to get long. If it's a momentum and a trend indicator, the momentum's given way on oil here, but the indicator's nice and low. I do like buying when the MACD is nice and low. There's lots of space from the midline to the bottom of the MACD averages. And so you can see as this flatlines, just begins to get some little upside, the histogram crosses the midline, and the MACD averages start to pull up, and then eventually we get enough closes above the 20-day moving average on the 60-minute chart to take us back to where we dropped from. So there's a bit of a boomerang trade overall. It took a whole week to pan out, but the MACD helps you, even if you don't use it to actually take trades. But not many people use it to actually take trades. It's normally just a support indicator for most people, myself included. But at least if you've got this properly marked off, just so happens that last week's lows coincide with the way this failed. That's not unsurprising. So obviously last week's lows were a key pivot, and I was buying into this little bit area here. Got quite a decent slice out of that last week. So, okay, so we lose momentum, we crack down, we start to cross over, we start to bend up, get a little rally into this week, into the end of this particular week, and then what happens? We get too high, we get very extended from the midline, so we fall back. But here the averages on the whole, with one minor exception, stay above the midline. So while this was just tipping over, this was just basically coming into support, which was supported by this. So we've got a MACD crossover here. That's mirrored, of course, with the MACD indicator. We're all above the midline. We're all beginning to wave higher, and then we stay above. We only get little excursions underneath the 20-day moving average. So we stay nice and above there. We get a little dip in the histogram, but this picks up on the momentum that we've got on this particular week in oil. And then we dip underneath again. Last week we dip underneath again. So we're going to cross over here at this point in the week. We've crossed over. We start to get close to some resistance. Crossover again here. We get a pickup here from this point. We start to get some higher closes here, and we cross over here, get above the midline, and then we just rally into the back end of the week. So what can we expect? So how can we use this now? What possible use is that to us here? Well, we've crossed. The histogram is under the midline since even just before the close last week, and now we are clearly just not holding the 20-day moving average, and we're under the midline on the MACD. So if we can start to, if this is going to survive and not continue lower, then, excuse me one second. I've just got to clear my throat, sorry. So here we are not looking as if we're going to cross. We keep closing lower for the last 2-3 hours. Quite a lot of red in that chart. So I must enlarge this. It's quite small for you, isn't it? So at the moment, the momentum is lost at the moment. Well, it's lost to the upside. We've got momentum to the downside, which is confirmed by the crossover, the move under the midline, even into the back end of last week, and the fact that this is not looking as if it's going to cross anytime soon at the moment. At the moment, that today's high was a test of that 20-day moving average, which immediately closed underneath us. So we are all red at the moment. So far, this push into 58.86 just got sold into. Okay, so if I was going to contemplate buying, I'd need at least to see a higher, a higher close, and I need this histogram to at least the histogram to start coming up. Now, let me think of a good example, a much better example than this. Let's look at the. Let me think. Well, let's look at the pound today. Now, the way in which I use MACD for a core part of my trading is this. If you've got, if you're making higher highs on the MACD, then you've got really good momentum. You've really got the buyers getting behind this. What you need to worry about is if you've got a new high in the trade and you are just touching the underside of the midline. So the crossovers on this one hit the underside of the midline and started to sell. That's why I started shorting this. And it was over 100 pips available from this, from the highs to the lows today. So it was quite a nice move. And the MACD called it. The key aspect of this is divergence. So here you can see we are getting lower highs as this is climbing up. So it's this level of divergence that I really like. And because this coincides with my favorite reversal setup, which is this, That's my favourite reversal setup, and that coincided with that. Okay, that final push up higher did break this, but it showed you that if you were to short up here, you had a high reading above the midline in a market that was selling at the highs. And then what happens? It flushes down to get some distance away from the midline, and it slams in and does a really nice reversal point. And then you get the whole reversal set up again, panning out here. You can see that's climbed up really quite nicely, quite aggressively, while this MACD was pretty pathetic. Look at the histogram. Histograms were really, really not doing it. So the momentum was clearly coming out of this market as we came up here. So by the time we got a nice move up here today, all we could do with the crossovers was hit the midline. So to summarize, you can, the divergence is really critical. It's a good, if you get used to, I call it a divvy for short. You know, that is point one. That is really crucial, and it really shows how the momentum is and the trend could be about to change. Now, whether that's a decent pullback as we got here, or whether that's a completely different, you know, whether a complete rollover, then we'll come on to that in a minute. Point two, if you are some way away from the midline, wait for at least the second high. Normally, the best time to get short on something like this is at least on a second attempt to get up here. And you get confirmation with the lower high there. Then you get a lower close on the 60-minute chart. Okay, it takes a long time to get down, but at least it shows you that that is likely to come down. So the second or the third punch higher with diminishing momentum is a really good setup for me. You know, they're two really good ways of using it. And then the obvious ones, you know, the move below or above the midline with the crossovers. And then the actual sort of crossover itself of the MACD. You know, these areas here. The bigger the time frame, the better for MACD. So if you look at a weekly chart on, okay, we'll stick with this one again. We'll stick with the pound US dollar. This is where you can really pick up, if you combine this with your usual analysis, it is extremely good. So here you've got a pretty good move up. You get a nice change in momentum here in the MACD, as that, there's your divergence. Then we break across the midline here and get the crossover here. So that leads us to this push here. And look how this really struggles. This MACD is really flatlining and even already dipping below the midline at this point here. So whilst the market is still pushing this higher, the MACD is telling you that the momentum is running out. And then finally, we reach the top We reach up for this trend line and then start closing lower, and then we just come down very nicely. There's the crossover. There's the histogram flatlining, then going under the midline, and then you get the distance away from the midline, which shows that this is potentially had its day. The shorts may be finished. Other good examples. Let's come on to a different market. Any questions, let me know. Let's switch markets and go to, let me think. Let's go to the DAX. We talk about DAX so much. Let's talk about the DAX. Right. So, get my drawing tools again. And what have we got? We've got distance away from the midline. And so we're potentially extended. Let's do that again. Up here, we get the actual cross very soon afterwards. Come under the midline. That's an engulfing bar anyway. There's just that bar there. Sorry, I don't know why I've drawn across there, never mind. There's your engulfing bar. There's your confirmation of the MACD that we are very high. And then every subsequent highs here just sell. We dip. As soon as we pull up, we sell. As soon as we pull up, we sell. And then we get a nice sweet move here, as indicated. The reason why I like MACD is because it's like having a lot of moving averages, but they're off the charts. So it cleans your charts up a little bit. Mind you, I've got a lot of moving averages on this chart anyway. And there's your reversal. Here. New low, a lower high in the, so a higher low in the MACD. And then we immediately start this decent trend to go back up to these highs. So where are we now? So we are beginning to cross. We're just on, potentially at a bit of a crossroads here. This MACD is, we are, let's just go through the factors again. We are a little bit away from the midline. We're running out of steam. We're potentially just about to go under the midline. We have had a sell signal up here. Again, this is engulfing bar. That red bar there is just, was it 1, 2, 3, 4? 4 weeks ago we had a sell signal, similar to here. We are even divergent from, that's a new high up there. And this momentum indicator is closing lower. We've got divergence here, as well as divergence from May 2015, a couple of years back. So we're potentially getting the same pattern that we've got here. This pattern here of engulfing bar and the highs selling is potentially what's happening here. Engulfing bar, the highs are selling. So we could, I think we need to come down to at least 12,500 to get any attempt to come in and look at this. If you look at, there's the Trump election bar there last year. We went into 2017 very aggressively. All the shallow pullbacks got bought in the early part of this year. The dip in May got bought, came out of the summer, came into September, that got bought. but we are struggling up here. We are really struggling, and we could, if we get into this bar again here, you see that we spent 3 months at least coming back into that bar. Once that bar triggered short, we spent this long peaking up, getting up into it and selling into it. So we could still see some upside into the back end of the year. Into January, February, if this line doesn't hold, then I think we'll see some pullbacks right into this area here. And the MACD is telling us that. The MACD is coming off, is crossing. You can see it's red. We're nearly coming under the midline, so we can see the momentum is really, really struggling. Let's look at one more market, and then I want to talk about gaps and potential moves for the rest of the week. Let's look at the US dollar yen. So what have we got here? We've got here we get some distance away from the midline. We are, bear in mind, with the whole point of Forex is that Forex loves to get back to its mean average. So clearly got trend line down. All the little highs coming into that trend line are selling. Then we get the crossover at the bottom. The crossover here, just as we get this big bar coming up here. Once we get past this, all the dips get bought. So the selling's over. Once we dip, we buy. Once we dip, we buy, and eventually we march right up into this area here. And this is why I think this is potentially going to fire higher to the upside, because we're above the midline. We've crossed over down here. We had divergence down there. You can see that the histogram is slightly higher here than it is here. So there's a divergence there. We pushed up into resistance. Now we pull back. And now we're just about getting above the midline again. So I think this could potentially get to 115. We're only 250 points off that now. So I think we might see that at least by Friday, if not earlier, if we can get these pullbacks to hold. And beside that, it's a really nice chart pattern anyway. If you strip away all this mess I've got on here and just look at the pure MACD and the price action. Last week we came into this mesh of moving averages and closed above it. It wasn't a particularly convincing close, but it was enough to engulf the previous week's bar. So this is very bullish. We just want to get a deeper pullback. I want 112 at least. 112 would be a gap fill. You can see we've gapped up here. 112 would be a nice gap fill. Give us a chance to get into back up to the highs from early November. And while we're doing it, let's just look at the daily. So we come out of this channel, we pushed higher very quickly. Now we need to come back into this pattern. 11188, 85 would be terrific if we see it. And then let's see if we can then bust through that resistance and potentially get up to 117. All right. Again, just looking at just about finishing on this, but the main thrust of this, yeah, for this week alone, we just need 235, 230 would be a decent area support. 177 would see the 200, but 220, 200, 220 would see a reasonable gap fill. Again, the momentum's coming off, we've crossed, so we're selling. That green dotted line is Sunday open, that's coming down from 293, that's very, very slow, very grinding, very, very slow. I did short the Dow today, but I came out at 400. This is a few quid profit on there, 141. I've got a sell signal at 4 o'clock. That would have given you an entry at 475, 480, and here we are at 375, closing lower. We talked in the room, in the Skype room, about this coming down, and of course there's the gap. Look at the MACD on this. This is excellent. We are clearly, you could just try, I think that when you get charts this clean, the markets are moved away, right away from the 20-day moving average. Histograms alone tell you we're losing momentum up here. And we've got, already have one crossover, and then we've got a second crossover with a lower high, divergence, divvy, nice divvy, bringing us potentially into 320 is the price I suggested this could go to, but I got bored with it and came out early and not benefited from a little bit further down move. Okay, so where's this going to go the rest of the week? Let's start talking about, anybody get any questions about MACD? The three-wave reversal is the best. This is a good example. Yes, we just about touch it on Monday the 20th overnight. So here we're clearly nice and weak. Don't test the 200-day moving average though. Here we get underneath the 200-day moving average. So that's not divergent. What was divergent is when we came down here again and clearly the crossovers, the averages on this MACD are clearly divergent. So then we get initial pop, get two extended, we move sideways for many, well, good few days. Finally get the histograms coming up and off we go. Right, no questions coming in. So, okay, so what are we going to expect today? Expect on this. This is non-farm payroll week. The fibs have burst through the 127 extension, which is here. This is the first extension. So once we get the gap fill, 170 would be a great place to get long on this if we see a nice decent dip. And then we could potentially close the week on 24,890, 25,000. That's a big ask. What do you think of the MACD at this stage, guys? What do you think of the MACD at this stage? What are you seeing here? Picking up the points I've just made. Yeah, in terms of what's happening with the MACD, what do you think it's a fade? Do you think a fade is due? Oh, a fade as in a drop and a buy in the dip, I guess. Is that what you mean? What are you actually seeing in the MACD alone? Let's just exaggerate the MACD for a second. What's this MACD showing you? Yeah, so point number one, we are extended from the mean. So we were very high here, came back down again and crossed over. So this is showing you a pullback. If you've got a market that's that strong, then that's showing you a potential pullback where it starts to cross and finally cross here. But it's not diversion, is it? We're again making new highs and still making, just about making a new high up there. So we are not, at the moment, we're not losing momentum. So this move to the upside is justified if you're a MACD fan. It's just about coming into the high. Okay, so we're right at the high, but it's not divergent because we've not made a lower high here. So that does suggest that the pullback into the support, 150, anything between 150 and 200 could get bought. We're dropping nicely now, coming into the. I should have held on to this, shouldn't I? It's crazy letting this go, getting out this early. Yeah, it's suggesting there's still momentum. So I think you're right. I think if we can get this to come into support, I think we're higher at this stage. But the smaller time frames definitely had this drop marked up. I think it was just a question of being very patient, getting short high, and just being very patient. And the high today was 537. We, on the 15-minute chart, we had a sell signal at 3:45 UK time. 3:45 UK time, we engulfed the new high. So ever since that period, 494 was the pullback, and here we are, 100 and whatever pips lower. Yeah, I got caught out on this last week, as you know, and so I'm just trying to separate in my mind what's happening with the DAX and the Dow. Because that disconnects, just trying to focus now on what I want out of the Dow and completely separately trading the Dow. I made a bit of a mess of the DAX, I have to be honest, today. It was quite messy, I thought. I made a mess. I did make amends on the Dow. I just didn't sit in the Dow long enough. Look at the Sunday open. There's the Sunday open at. I've got it there. It needs to be a little higher, I think. Around about the 400 mark. So we held that for the previous 2 hours, and now we're just finally dropping through it. As we're getting an hour and a half towards the close, and we're just dropping through it. Well, there's the sell signal. A new high, lower close, so 450, 460 is the sell signal on the 1 hour chart. 495 was a sell signal on the 15-minute chart. And the 5-minute, you see, it hit the top of started coming down over here. I started shorting here. Then we get a nice drop. Then we get the ceiling of the range sells at 480, 481. I take it short and come out at 400. And then it dipped up to 440, did a 42 pip run. and then here we are, as you can see, getting close to, well, pretty much, there's the gap fill there at 325. Well, sorry, that's not the gap fill, that's a testing of Monday's highs. And then there's the actual gap fill at 238, 230 area. A nice trade. I did a nice trade. I've done well out this last couple of days. I shorted this one. Got in a little too early on Friday, but then backed off. We had an open range up here as well. We just peaked above the range and immediately shot back in it for close on to 400 pips. I didn't get 400 pips, but I got a decent slice anyway. Yeah, cryptocurrencies. I keep looking at the Bitcoin. Let's look at the Bitcoin now. Yeah, I mean, that's not moved much more than the Dow. I tend to find this moves a lot more in overnight periods. I mean, this took a heavy dip on the Sunday open. It's not done that much today. I just don't rate, I honestly don't rate it. I don't think it's any better than the Dow or the Euro. Yeah, I think it's all going to. I know the futures market, the CME, Chicago Exchange are going to take it on. CME, Chicago Mercantile, isn't it? It's becoming a legitimate thing. I think it needs to settle. For me to trade it, it needs to settle down. Well, we have some decent moves here on the 30th, but the spread's big. Yeah, okay. I mean, you get some decent moves out of it, but the spread's big. If you really want to use a lot of leverage, then just use more margin on the Dow if that's what you want. I'd rather not abuse leverage and just trade something more technical with more history behind it on the Dow. Anyway, yeah, I tell you what, the brokers must love it. The amount of people must losing money on this with their big spreads. They must love it. The brokers must have made a fortune on it. This is something I wrote on this ages ago. Bitcoin support coming into focus down here. Let's take that off. But it works in just the same way as everything else. Likes the 100-day moving average down here in September. Held the 20-day moving average. We're very extended up here. Very extended, all the height it's getting. This is the daily chart. Yeah, so I'm just interested in. Yeah, I think what's happening at the moment is we're just getting backfilled at the moment. We're just getting backfilled. Fad and bubble watching, yeah, I like it. We're getting backfilled. As the backfills connect, then I think in the second half of the week, as we get towards non-farm payroll, then hopefully this will pick up and do what I want it to do. But the MACD, even on a 60-minute chart, yeah, I think the MACD is a useful tool. This looked rubbish early part of last week, really poor. But if you just really exaggerate the MACD here, you can see MACD called the lows down here, got across, dipped away from the mean, started crossing here by late Monday. So if you just follow the crossovers alone, got very high up here on Thursday, nice big dip into the close on Friday, and here we are coming off of the Sunday Open, just waiting until we get the gap fill. That should take these moving averages lower, perhaps down to the midline once we come down here. And then if that is going to get bought, then these are the sort of spots we're going to see. And then we'll see the histogram go back up above the midline if that's going to work. Okay, but I like the MACD. The thing about the MACD is I think it's sensitive. I think it's a very sensitive indicator, more so and more visual than a lot of other indicators. That's why I like it. In the past I've had stochastics, used simple stochastics, and one or two other indicators, RSI and all the rest of it, all the usual ones. A value indicator, I can't remember the exact name of it now. They all do very, very similar things, but the MACD I think is a little bit more sensitive. Right. Any more questions? Anything else you want to look at? Yeah, but it's the bigger the time frame, the better. I mean, look at this Nikkei at the low. I do like looking at stocks and markets with nice low MACD. It's clearly divergent. There's a clear divvy down there. Actually, no, there wasn't. What am I talking about? No, there wasn't a diversion down there. It started getting there it is. There's the divergence. It'll make a new low. It's marginal. I agree with you. It's marginal. Huge amount of support from the 13th of October 2014 down there on this weekly chart. Yeah. So we definitely saw this one as the MACD started to bend up on this new low. We definitely saw the selling grind to a really slow up, and gradually saw this one come in. We are some distance away from the average, and we are losing momentum up here, which is quite normal the back end of the year now. Christmas is coming up fast, and this is normally where you'd see a lot of profit taken, particularly after a move like this. Hardly surprising that the Dow is dipping at this period. Yeah, but the DAX was definitely, it was firing longs and shorts all over the place, wasn't it? We were short up until 11 o'clock, then we held the 50%. Hadn't done a proper gap fill, almost gap filled, but smacked into 120 and then sold at this top of the fib zone here at 100, and here we are close to 50 again, but very, very choppy. I think we could be in for some more selling. I think we need to, like the rest of the markets, I think this needs to drop lower. The crossovers, the averages on the MACD are only just coming under the midline. So I think the MACD to me suggests that this could drop So if we start to close underneath this here, I think we could come all the way down to 800 and possibly lower. The three-wave reversal would be closer to 700 to me. But I think it's all, you know, we need to hold this 13K to see if that's going to push up. All right, well, I think I'll leave it there. A good session, guys. It's good to, it's a good theme to really concentrate on and pick your way through. Yeah, like I said, it's I think MACD is nice and sensitive and good to use on all your charts. All right, unless you've got any specific questions, I'll leave it there. But I think my main focus for the week is I'm gonna just alarm this US dollar yen. I must buy this on a gap fill. I think that's one of the best charts of the week. I think that's going to be my chart of the week, I think. I'll give you a link to stockcharts.com. I'll show you a page in stock charts. But my advice to you is to get MACD on your charts and just go through your charts. You know, run through where the reversal points were, where the buy opportunities were on the different time frames, and do a bit of self exploration as well as the link I'm going to give you. Okay. Right, I'll leave it there. Thanks very much, and I'll send you that link in the room. Thanks, guys.